Hello, traders. It's the first trading day of 2022. Everybody's so excited. You've had the long weekend to think about how you're going to approach the market, things that you're going to work on, things that you're going to improve on, how you're going to get your trading on track. You come in Monday morning, you can't wait to get started. You turn your screen on, and the S&P 500 is up 25 points before the open. This is it. This is it. We're going to run and we're going to run hard. Everybody wants to start this year off on a positive note. Well, so much for your patience. As I mentioned in my pre-open market comments, and you can get these on my Twitter feed as well, but this is right from my chat room, and I post it to Twitter as well. If you look down, here's how you can start your day off and your year off on a very bearish note. Rush in aggressively. Buy the open if you want to join all the novice bullish speculators. It's not a good crowd to follow. And it's the perfect formula for starting 2022 off in the hole. Instead, you need to patiently wait for your opportunities to set up. So let's take a look at what happened. This is a chart of the S&P 500. We got this big gap up right in here, which actually just erased the two long red candles that we had in the last 10 minutes of trading during 2021. That was all program driven. You could see how the market got up to the prior day's high. Nice long green candle. Another nice long green candle. If you were early, you were thinking, hey, these are two stacked long green candles. Here we go. This is going to be a great year. Uh-oh. Oh, no. Oh, no. That was a 30-point S&P 500 drop. Not again. Here we go again. Is that how you started your trading year off? Gosh, I hope not. I hope you're in the camp of really patient traders who recognized that Japan's market is closed today. China's market is closed today. A good part of the trading community is celebrating the holiday. That means the volume is going to be very, very light. If you go into a daily chart, take a look at what's been happening recently. Nice big rally right in here on the S&P 500 on super light volume. As I've been telling you recently, doji, pretty close to doji. Tiny little bodied candles in any event. They may not be perfect dojis, but it tells you the trading range intraday, very compressed. What do we know about breakouts to a new high when we start seeing these tiny candles? They reverse. Right there, tiny candles, new high, whoosh, down. We've also seen a rotation into the laggards. That also suggests that the market is getting toppy. You start seeing a lack of leadership from the other big names, and there's usually a little bit of profit taking in those big run-ups, and the money rotates into some of the laggards. That's also a sign that we're in the final stages of a rally. Am I looking for a massive drop in 2022? Is this the time I go out and load up on puts? No. If you're a swing trader, you need to follow that long-term market uptrend. Yeah, that's the one I'm talking about. And when you get a dip, that's where you sell your bullish put spreads. You get a dip, that's where you sell your bullish put spreads. Nothing has changed. I think we're going to get a dip in the next week to 2 weeks. Don't know the exact timing. But swing traders should be waiting patiently for a dip like that. Down to the 100-day moving average, if we're lucky, may not get that low. The 50-day moving average, I believe, is in striking distance. And you can see we don't have to travel too far to get there. Sell some bullish put spreads here, then wait. Now, why would I want to sell bullish put spreads here when the market could come all the way down here? Because I don't know. Some of these dips only last a day or two. They don't last long, and then you're off to the races. They last a couple of days. See you later. And in the event that that might happen, yeah, this would be a good place to sell some bullish put spreads, not maybe a third of what you would hope to get off. Then, if we do get the big drop down to the 100-day moving average, this is where you wait for support to be confirmed. You wait for that bounce. So you would not sell here. You would wait for this candle right here. then you would get aggressive on the notion that the market's going to continue to rally higher. So that's how I would be playing it if I were a swing trader. If I'm a day trader, I know that the volume is going to be light. I know the day's range is going to be fairly compressed, and we're going to see lots of chop. So I come into the day with that expectation. I'm also expecting that these weak hands, these bullish speculators who just want to run in and buy everything, are going to get the door slammed in their face. See you later. Sorry that you started the year off on a weak note. So now we've got a little bit of a drift lower. 1, 2 support levels. We could continue to drift lower right in here. So we can also see that there is support here. 1, 2, 3, 4, 5 touches in the last 2 days. So yes, we're probably going to poke down through that lower end, and programs are going to try and flush these people out, and they'll trigger those sell stops. So I think you need to be very careful today. You see a lot of candles, they're mixed. Long red candles, long green candle, red, green. Most of the long ones tend to be on the downside today. So that tells you that there's a little bit of negative bias to the market. You've got to be very, very patient. You've got to wait for your trades to set up. Now, I am more inclined to trade from the long side. I'm seeing some better opportunities after flipping a bunch of charts. I would rather see the market form support, wait for a bounce, and trade from the long side, in and out. So I know I have to be a little bit cautious because I do also suspect that that low of the day is going to fail. And I don't believe we're going to see a meaningful bounce today until we see a couple of long red candles stack, taking out the low of the day, and then a bullish hammer, bullish engulf, followed by another long green candle stacked. Then you'll know, okay, they just came in, they tried to trigger these sell stops. They did. Now we're bouncing. We're back into the range. You get that type of price action, then you're going to be wanting to look for stocks with relative strength. And there are some good ones. Actually, the QQQ is pretty strong relative to the S&P 500. Let's take a look at it. You can see how we almost tested the low of the day on the SPY here in this chart. If we go to QQQ, there's the low of the day. Here's where it came back to. You can see how it is much higher than its low of the day. That tells you that tech stocks are pretty dang strong. That tells you that this is where you want to be focusing your attention. I can also come in and click here, drop a little downward sloping alert line. If we're breached to the upside, I know that that's excellent. I'll get that alert served up to me. And let's take a look and see if we can find some nice stocks. Hey, I added a really nice feature. So these signals, this is the 1OP indicator for stock, and this is what it's telling us on a 5-minute, 15-minute, 30-minute basis. I can expand this window and see how it's signaling 1 hour, 2 hour, 4 hour time frames as well. So I can see what signals I have across multiple time frames. Let's go into heavy buying. I'm going to focus on the long side. That's where I feel more comfortable trading today. I still think right now, about 3 hours into trading, it's still premature to go in and load up on longs. I think the market still has to find that low, still has to find those long red candles, get that reversal off the low, shake out all those bullish speculators. Then we've got a chance to run higher and to rebound. So very early still on the long side, but I'm going to show you a couple stocks that are holding up well. Tesla, really, really nice. Big gap up today. Look at it hold those gains while the market is doing what? Drifting lower. So let me make sure that I'm on SPY because I was on QQQ. You can see getting ready to maybe come in and test the lower end of this. So I do want to talk a little bit about the 1OP indicator today because in the chat room, we're talking about Tesla and how good it looked. And so we had a nice bullish cross right here on the S&P 500 right in this area. And I had noticed Tesla. So I bought some right in here when the SPY was ready to cross, and that coincided with this level right here. I got this long green candle. I had set an upside alert, so I knew instantly when Tesla was making a move. Bought it here, sold here, took my gains. Now we move on. We wait for the market to run its course. If you're looking at Tesla right in here and you're having difficulty with your patience, I urge you to use 10P on a 5-minute basis with the S&P 500 as a timing device. So let's take a look at what's happening. While we are getting a high in Tesla right here and we're taking profits, we can see that we have a bearish 10P cross. And actually in here is where I started taking profits in Tesla. And I said, listen, this stock could go to the moon, but if I'm looking to enter Tesla, why don't I wait to see what this bearish S&P 500 cycle tells me? And if I'm right, and it is right, we could see lower prices. And Tesla will pull back. And I'm able to evaluate, number one, how quickly and how deeply the market pulled back. Is there more of a market concern that I need to have, that maybe we haven't found support, that maybe we go lower during the course of the day? I'll know if I watch this cycle. Second of all, how will Tesla respond to a market drop? Will it hold its bid very well? Will it be ready to charge higher? Will I have an opportunity to enter better? Yes. Well, the entry is going to be better for a couple of reasons. Even if Tesla tick, 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 kept going higher, that would still be information that I have, new information, and it'll be a sign of super strength, because during that time the market will have gone down. So I'll have confidence that the market has found support, and I'll know I've got the real deal in Tesla because it will have continued to tick higher. So your entry may not be at a better price, but it's better with respect to you having more information on the market and on the strength in the underlying stock. So I hope that lesson resonates with you. Right now, we're seeing lots of tails under body. We're seeing some general weakness in here. We're starting to get a 10P bullish cross. That's nice. We know we've got a lot of touches in here. We could get a little bit of a rally, but we can expect that later this afternoon, those sellers will be back on the next bearish cross probably, and they're going to try and take out the support level right in here. So I think you've got to be a little careful regardless of what you're trading, which side of the market you're on. We are inside the first hour range. We are inside the prior day's range. We are in a low volume environment. We have markets that are closed overseas. These are all pieces of information that you need to be picking up on because they determine your trading size. The market conditions determine your trading size. If you've got a wishy-washy go nowhere market, you should not be trading big size. Because as soon as you think that you've got a nice little lift off in here, oh yeah, we retraced half of that long red candle. This is looking pretty good. Okay, I'm going to start loading up here. Ugh. Get these candles out of nowhere. It's just low volume price action. There's nothing going on right now. So you should be keeping your trades small. Let's find a stock or two. Let's take a look at the indicators across multiple time frames and see if anything's lining up. NIO, 5, 15, 30 minute. Hey, that's not looking too bad. Look at the daily chart. Not what I would want to see. Lower right hand corner. That's not what I want for my longs. Well, WFC, that's good on 15 and 30. Hey, downward sloping trend line. That's pretty nice. You're the 50-day moving average on its high of the day. Not too bad. Look at that. JPM. Excellent. Another one doing quite well. 5, 15, 30 minute timelines. Okay, well, this makes it a lot easier for us to find stocks during the day that are really performing well because they're coming up on the searches, and then we can look very easily to see what is on a time signal for all 3 time frames. So I'm going to take a look at a couple of other stocks. You know I like Tesla. I like that D1 chart. Even with the market pulling back in here, the stock has been able to stay pretty close to the high of the day. I love that. The D1 downward sloping trend line right in here, breach to the upside. This is a gigantic bullish flag formation. I think Tesla's going to be able to continue to march higher. It is my pick of the day. I think you're going to get up to about 1240 in the next couple of weeks just based on this price action with a weak overall market. So that one looked good. Apple was another one that was coming up on our lists earlier today. It looks super good. Look at it challenge the high of the day. Apple could easily be my pick of the day. Look at how well the stock has been able to maintain the high of the day, even with the market pulling back in here. So yes, I definitely like Apple as well. I hope this lesson helps you get 2022 off to a good start. Try and be patient. Really wait for those windows of opportunity to line up. When I talk about tumblers in a lock that have to all be in line in order for the probability to be right, in order for that door to unlock, here's what you need to watch for. You want to make sure that on a D1 basis or a longer term basis, you've got those buy signals lining up for the S&P 500, which incidentally, they are in the chat room. So these are all the 10p buy and sell signals over these time frames. And you can see M15, 30, and 1 hour are still bearish. M5 is just ticking positive. You'd like to at least get M5 and M15 agreeing at minimum. So you want to have the market on a longer term basis and a shorter term basis agreeing with you. Then you want to have the same thing for the stock. You'd like to see a stock that also has a buy signal on a 5-minute basis, 15-minute basis, 30-minute basis. You'd like to see it have a buy signal across every time frame. Then you know the stock is really, really strong. So please make sure that you're using these tools. Let's take a look at WBA. That looks pretty good too. Choppy stock, but pretty nice little breakout right in here. And we can see if we've got a couple of other searches yielding anything good in here. GS, Goldman Sachs, that has some overhead resistance. Tesla and Apple, those are your two picks of the day. We'll take a look at how they did tomorrow. You've really got to wait, though, before you enter those two stocks. Make sure that you're waiting for the support to be confirmed. Set passive targets, take profits. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.